I'd say 90% of them are probably going to start to blow up next year.
What do you got, Chamath?
Well, I guess I'm fading you guys, and I'm also fading implicitly Friedberg's pick of Stripe. But my biggest business loser for 2022 is Visa and MasterCard and traditional payment rails and the entire ecosystem around it. So I think that this is the year you can put on what probably will be the most profitable spread trade of my lifetime, which is to be short these companies. And that anybody that basically lives off of this 2 or 3% tax and be long, well thought out Web3 crypto projects that are rebuilding payments infrastructure in a completely decentralized way. And that a lot of these scammy crypto projects will go to zero. However, if you read the white papers of these crypto projects and you systematically put together a framework, I think you can be long those and you can be short Visa, MasterCard, because I think this is their peak market cap.
Man, Visa's market cap is $500 billion, huh? It's incredible.
It's a completely contrived duopoly that doesn't need to exist.
And what does Visa mean to a young person?
And MasterCard's almost $400 billion. So they're $1 trillion combined market cap.
By the way,
That's incredible.
you have to understand that the canary in the coal mine here is pretty significant. The most important thing is Amazon, earlier this year, Nick, maybe you can post this, decided to just shut Visa off in the UK.
Oh, yeah.
Now,
Bing.
Amazon is not going to do something like that, in my opinion, unless it's a test of what they can do all around the world. And again, going back to this idea of arming the rebels, there really is no need today for all of these small businesses to sit on top of Visa, MasterCard, and Amex rails. It's unnecessary. And so it'll probably get developed in the developing world first. This is why I think, focusing in markets like Nigeria, to me, are way more exciting than talking about these fading Western European countries. Who care? This is where this stuff will happen. It's not to say that those other companies can't, trundle along for a while. But when I say, we'll look back in 10 years and their market caps will be materially lower, anybody in those traditional infrastructure and rails versus anybody in this new infrastructure and rails it will look like a no-brainer 10 years.
Do you consider the buy now, pay later companies like Affirm and Upstart or whatever? I don't know if Upstart fits in that category, but some of these buy now, pay later businesses as being the alternative to the traditional payment networks, or do you think that it's a different business?
No, right now, I think what buy now, pay later is a rate arbitrage.
Right.
When, as you said earlier, rates are very, very low, so the cost of capital is low. But it again starts to habituate the consumer experience to, I don't need to pay these usurious rates to these 3 credit card companies to facilitate a transaction of money that I already have or money that I'm good for. That's the big idea, right? And so when you translate that into Web3 in a good project or a good series of projects, you're not going to need these companies. And so it's going to, I think, eviscerate trillions of dollars of market cap.
Well, not to mention, you also have in between these two, Venmo and Cash App, which are not crypto, but they certainly as brands mean more to young people than Visa and MasterCard.
Yeah, do you think Block, used to be called Square, is a good pair trade against Visa, MasterCard in this context?
Yeah, I like it.
That starts to get closer to the truth. My perspective is you can kind of short anybody who's public, because anybody who's public can really only be public or will go public because they feast off of this artificial 2 or 3% transaction fee. Everybody does. The companies you want to be long are those private companies in crypto that you can read the white papers of, whose protocols have utility, and who's building some element of infrastructure that replaces a traditional business. As long as you can kind of build those things up. Balaji, for example, had a bunch of tweets this weekend where he was like, he has this idea for a mirror table. What is that? That replaces, cap table management. Right now, why is that important? Well, because it touches all of these really important KYC, AML, investing laws across all these countries in all of these places. It's just a very simple example of where the new company that actually builds that capability of these mirror tables will do so at virtually no cost. And so it'll have a 50-person team. And so they're not going to have offices all over the world. Their cost basis will be, an order or 2 orders of magnitude cheaper.
Let's face it, Visa and MasterCard became a tax. It took them decades and decades to have that power over folks. But I think Affirm does break that. Affirm breaks it because the people who are selling then decide, you know what? We'll give a little bit of a discount here to get more people to buy. Go ahead.
They were the classic network effect monopoly business, right? Like they got the small businesses, they got the credit cards, and by extension, the consumers on the network. And ultimately, they created these absolutely locked-in networks. But as with all networks, complacency kind of, drives innovation, and this fueled innovation that we're seeing is now starting to figure out ways to not just crack their way into the network, but to replace them with an entirely different model.
Last point on this. This is not one where I think this disruption happens slow. I think it happens swiftly.
Swiftly being 5 to 10 years?
No, like in a year.
Yeah, Chamath's point is really interesting. There are several billion people globally who do not have credit and who are unbanked. And so if you think about where this is more likely to come from, it's more likely to come from an innovative model in those markets that then ultimately finds its way into the developed world versus, trying to break apart Visa and MasterCard and go get these small businesses to switch out of them and so on today. So it's a really interesting point.
Okay, Sachs, what do you got?
I don't know if it's biggest loser, but the thing I'm most worried about is in 2022, the Fed is going to stop quantitative easing, or so they have said. They are, I guess March will be the last month in which they do this QE. So starting in April, there won't be any of this liquidity pumped into the system. And so I think the losers are going to be any of these asset classes that are heavily dependent on or have benefited from all this excess liquidity sloshing through the system. It's true that the stock market, I think, has already priced in rate increases and an increase in the discount rate. But I don't know if markets can fully price in a reduction in liquidity. We don't know exactly what that's going to look like. And so if liquidity is reduced next year, I think that could reverberate through a bunch of markets, including, everything from sports cards, and collectibles, which have gone through the roof, to art, to crypto, to, maybe some growth stocks, and on it goes. So that's my biggest worry, is what happens when the Fed stops QE. And
so the biggest loser is markets because of quantitative easing.
The markets that have to get off drugs, basically. So
let's go to best performing asset of 2022. What do you got, Chamath?
This is simple. This will be battery metals. Lithium, nickel, cobalt, graphite. Put them in a basket.
Like it.
You can be long these things, and I think you're going to
rapid fire Sachs. What do you got? Best performing asset.
I just said Series A venture because it's pretty unoriginal. It's what I do. I think growth got a little bit overfunded and overheated, and I think the seed stage also. There were so many new seed investors. Again, it might have been partially because of excess liquidity. So Series A is still the choke point, and I think it's still the best area to invest in. Innovation's not going to stop. There's going to be great Series A investments next year.
I also picked early stage startups because that's where the magic happens. I picked early stage, like right before Series A. I think SPACing, direct listings, raising money, people coming down to do the Series Bs, all of that is creating a pull for more startups, and the founders are getting very sophisticated in terms of finding product market fit and scaling globally, earlier. And that's what's creating these great big outcomes, whether it was Uber or Facebook, both figuring out, and Airbnb, how to go global quickly. So my choice for best performing asset of 2022 is still early stage startup.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar, and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.